Hi there, I'm James Preston and thanks for tuning in to kalkinemedia. Dividend stocks are generally sought after, and in this segment I'll let you know exactly why that is. But before I give you all the details, please make sure to subscribe to the channel and press the bell icon to be notified of the latest videos from Kalkine. Dividend stocks are those companies that provide dividends to their shareholders consistently. Generally, well-established corporations opt to pay out dividends regularly. Investors generally look for dividend stocks as they offer a stream of income above the growth in a portfolio's market value. So, what is a dividend? A dividend refers to the distribution from a company's earnings to the shareholders. The board of directors decide these payouts. A company provides dividends in cash or additional stocks to its shareholders as a reward for investing their hard-earned money into the business itself. A dividend is the cash payout that the company provides to its shareholders from its earnings. While companies mainly provide dividends in the form of cash, there are other instances where shareholders are given an option to reinvest the dividend back into the company. These companies believe that they could make better use of the dividend amount to grow their business, and the investors can benefit from the stock price appreciation. Dividends are more sought after during times of high volatility as investors aggressively look for ways to earn regular extra income. There are generally 4 types of dividends. The most common is the cash dividend, where, as the name suggests, the companies provide a dividend in cash. These cash dividends could be ordinary or qualified. In an ordinary dividend, the shareholders are taxed at the income tax rate. On the other hand, the qualified dividend is taxed as capital gains. Other than a cash dividend, other forms include stock dividend, asset dividend, and special dividend. Stock dividends represent dividend payouts in the form of shares. Asset dividends could pay in the form of an asset like property, and special dividends are an occasional one-time cash payout that the company might pay to shareholders. A dividend yield measures the amount of dividend the company is paying to its shareholders annually in relation to its current stock price. The formula for calculating dividend yield is, if a company's stock price is US $100 and it pays an annual dividend of US $10, the dividend yield would be 10%. This is considered a good investment. However, sometimes an increased annual dividend could be an alarming sign. This is because the increased annual dividend could have arisen due to a falling market price of the share. Another term to be familiar with is a payout ratio. A payout ratio refers to the proportion of earnings paid to shareholders compared to the company's net earnings. The ratio tells the shareholders the amount of money the company is paying and the amount it keeps to repay debts, reinvest, or add to its cash reserves. Throughout the dividend payout ratio, investors try to analyze and select the companies in sync with their investment objectives. An important parameter that investors look at in dividend stocks is the total return they might receive by investing in such stocks. Total return comprises an increase in the stock price or capital gains and the dividend paid. Capital gains are a portion of the total return on investment due to an increase in the market share of the price. Earnings per share, or EPS, is another component that investors look at while selecting a dividend stock. Dividend-paying companies that show constant growth in their EPS and increase in dividends are the ones more preferred by investors looking for dividend stocks. And lastly, P/E ratio is also one factor that investors might look at to assess whether the stock is overvalued or undervalued. The ratio is calculated by dividing the market price per share by the EPS of the company. If you've enjoyed the information in this video, then make sure to like, share, and comment on the video, and of course, subscribe to the channel and press the bell icon to be notified of the latest videos. For more information and regular updates, please head to the website kalkinemedia.com. I'm James Preston for kalkinemedia.